Welcome, I'm Paul Hunt. This is a special edition feature interview produced for download by Energy News. It was late September when ASX-listed Melbana Energy started drilling, or spud, its oil exploration well in Cuba. The Alameda 1 well is targeting 3 prospects, which have the potential to deliver 141 million barrels of oil, worth trillions on current oil prices. The company's seen a huge share price rise since, and there's a good chance it will rise higher. Let's find out where Melbana is now. Our guest is Andrew Purcell, Executive Chair. Andrew, welcome to the program.
Hey Paul, good to chat to you again.
Some major events have happened since we last talked. You closed your divestment of an offshore asset in Western Australia. Tell me about that and what you've received in turn.
Well, we sold our permit WA 488P, which is a shallow water offshore permit containing a prospect we defined and called Beehive, which was an isolated carbonate buildup. And we sold it to a US Fortune 500 firm out of Houston, a $50 billion enterprise value firm. And it's their country entry for them, EOG resources, which is very exciting for the industry in Australia, but particularly exciting to have this prospect drilled at last. We got paid $7.5 million US up front, which is very handy, walking around money. But the real game is the drilling of that well, which they will now entirely fund, which they're working towards having planned and permitted for drilling either late next year in the drilling season, potentially early the year after. And look, we think, and the independent reserve experts confirmed, it has a 400 million barrel best case prospective resource. But these carbonate buildups, which haven't been tested in Australia, when they do get tested and when they work elsewhere in the world, are responsible for some of the world's largest finds of hydrocarbons. So the upper estimate's 1.4 billion barrels on this buildup. If they're successful, we get paid a royalty of $10 million for every 25 million barrels they produce. So, the potential is enormous, but, it's got to be drilled and it's got to be found first.
Let's turn to your other projects now. Could you start by giving us a bit of insight into Alameda 1 and give us some context of the well and the targets?
Yeah, Alameda 1 they're both onshore wells that we're doing in Cuba. Our permit is onshore, about 2 hours east of Havana. We started drilling it in early September. We, in this case, are ourselves and our partner, the National Oil Company of Angola. They're writing most of the checks, which we're very appreciative for. But we're the operator, so we're the people responsible for the operations and the cost controls. And drilling started strongly, and we have 3 prospects that we had defined in this first well. We're testing 3 different areas of interest that were defined in part because of offset wells that had made discoveries nearby and flowed oil to the surface previously. So we're going back in to see what happened there. But almost as soon as we started drilling, we entered an oil interval that continued for 600 plus meters in an area where wasn't one of our prospects. So, that was a bonus, and we're very excited by that. And we're doing work on what that means for not only this well, but for that entire upper sheet area across our 2,500 kilometer block now, that we know that this occurred in the upper sheet on this well. We got past that zone, and then we started to encounter some pressure, which is, it's harder work drilling into pressure. You got to balance your muds up. You got to make considerations about managing the pressure and not damaging the formation. And we had expected the pressure from the offset wells, but it came at us about 300 meters higher or shallower than we were expecting it. So it became a bit of a game of managing the pressure, but pressure is what you want, Paul. When you're drilling for oil and gas, you want to see that, because it gives the pressure is what allows you to recover the hydrocarbons if they exist there. And so getting that good pressure, getting all the hydrocarbons that we already did above, but then the gas influxes and the oil influxes in these higher pressure zones, yeah, so far very good, so far exciting.
Block 9, how big is it, and what do you know about it already?
Well, it's 2,500 square kilometres, so it's enormous uh, in context of the type of permit that one would normally get given. It's on trend on Cuba's prolific northern coastline hydrocarbon zone, where they produce their 45,000 barrels a day of oil. It's adjacent to the Varadero field, which was an 11 billion barrel field discovery 20 years ago. But we don't know a lot about what's in Block 9. There's the offset wells I mentioned earlier that were drilled that recovered oil. There's some seismic lines, several different vintage of 2D seismic lines, but not a lot. And they're all concentrated up in that sort of northwest corner of the block near the existing oil industry and discovery. So the rest of the runway of the block is ahead of us. And it's now looking, and there are oil seeps all through it. We've noticed that. So it's an incredibly prospective runway of projects. But we're here, and we're starting with this, and looking at the oil we've found, and we're thinking about what happens next there.
You've just restarted drilling Alameda 1. How deep are you now? And when do you expect to hit your targets?
We've restarted operations. We've had some of the mud materials arrive in country about now, actually. The first couple of bags of deliveries arrived today in Cuba. So we're just getting everything ready now. The mud weight set, the cement cord has to be, plug has to be drilled out. When do we expect to get to our targets? Well, I think we're in a target at the moment. We right before we stopped drilling last month, we went through, I already mentioned the high pressures, but we went through a shale zone called a serpentinite. And as soon as we went through that shale zone, the gas came at us, the pressure came at us even more. So we think that was good evidence that this serpentinite is acting like a functioning seal of what's below. So 1890 odd meters, we got a bit past that serpentinite. We've got to 1890 meters. That's where we are. And, drilling ahead is, we're all very keen because of, the taste we got before we had to, cautiously put a hold on things while we waited for the materials to come to ensure we can continue to control this well.
You're listening to Energy News. Melbana Energy's Executive Chair, Andrew Purcell, is with me for this episode. Andrew, while you've been drilling Alameda 1, which we've discussed in depth now, what's the progress been of Zapato 1, the other well in your 2-well campaign?
Well, we're on pad development work there. Well, actually, the pad's been completed. The road access is being improved. We'll probably wait a little bit now because Zapato starts immediately after Alameda. And now that we've had this standby period in Alameda, Zapato's anticipated start date's been commensurately pushed back a bit. So, digging the water wells and the conductor cellars and things like that, that's, if we're not going to be there soon, it does have a potential for an HSE as hazard, having those pits around. So, we'll kick that down the road a bit, but that's ready to go. Essentially ready to go once we finished Alameda and we moved the rig over there.
Can you talk to the targets that Zapato is chasing?
Well, it's only a single target that we were able to define in Zapato, but it's an incredibly interesting one because there is about 20 kilometers away from where we're drilling at the moment. Historically, at surface, there was the Matembo oil field, and it was a very, very light crude, which is extraordinarily unusual for Cuba. I mean, I'm up to 60 plus API light crude, and the source of that oil has never been found. There were a few wells drilled historically looking for it, but when we position them with the seismic and our analysis, we can see these very large, two very large structures that could be in the right position to be the source for this historic oil field. And those previous offset wells, neither of them drilled deep enough to hit these structures. So we're going for the one that we've called the Zapato structure, and we're going to go straight into the apex of it. And it's a 1,000 meter interval, it looks to us, from the seismic. So it's a one-shot well, straight vertical, straight down, 95 million barrels, best estimate. if we're right.
The success at Alameda 1 so far, I mean, you've already hit hydrocarbons on your way down. Does that give you confidence for Zapato 1 as well?
Yeah, absolutely. It's 20 kilometers away, and look, this large Zapato structure that I just mentioned, it was defined on a gravity anomaly, and because it's so big, and I mentioned earlier the Varadero oil field just across the fence to our Block 9 acreage, the 11 billion barrel Varadero oil field, that was identified on a gravity anomaly initially. So there's a lot of corollaries and the historic oil fields and piecing it all together, and yeah, it's a good prospect.
You mentioned that some of the oil fields nearby have encountered light oil, light crude. What's the importance behind that?
Lighter crude's more valuable because it has more uses, has fewer deleterious elements to it. It's cleaner, so trades at a premium.
Things are looking pretty exciting for Melbana in the short to mid term. But if you strike your huge resources, I mean, Zapato's 95 million barrels, and how much is Alameda?
132 or 135 across all three of the prospects we're looking at.
So those are elephant-sized targets. What's the plan to get this oil to market?
Well, we've got a plan that would begin with as simply as possible, wanting to determine the commerciality of the discoveries, if there is a commercial amount of oil there. Look, putting one of these wells onto an extended flow test initially, something as simple as that, probably, because you're proximate to market and you can just get a sense of the volume and how the pressure behaves over time, what the volume of the reservoir is, by just putting on a bit of an extended production test. And that's cheap and easy and quick to do, and gives great confidence then to the partners in planning next steps.
A development of such a large resource, that would obviously involve more than two wells. But like you said, you're going to flow test and do that sort of early work. What does a development look like to you, or what could it look like?
Well, it's a large acreage, as I said. It's got a lot of prospectivity. I think you'd use the production to fund the development of the field, and we're very lucky, as I've mentioned already, to have a national oil company as our partner. They're not in it for nickels and dimes. They're in it for something of a scale that matters to a national oil company. So, I would imagine that we would have a lot to discuss soon with them. But in my opinion, and in view of what I see their objectives are and what our capacities are, let's just get some production going cheaply, and let's use that revenue to build this out over time and keep scaling it up over time.
What's it like operating in Cuba? I mean, where's this oil going to go?
Depends what quality it is, Paul. The lighter the crude, Cuba's domestic production is quite heavy. It's typical, low teens API, same as Venezuela, same as that part of the world, and that's what their industry consumes. I mean, their electricity grid is probably 90+% oil fired, and so if it were to be heavier crude like they're used to finding, then that would probably just go straight into domestic consumption, I'd imagine. But if it's lighter, it has some serious foreign exchange earning consequences for them, which might mean exports and foreign currency earnings.
How easy is it to export oil from Cuba?
Well, it's an island. Nothing's far away, especially on terms that we Australians are used to. We've got a deep water oil terminal called at Matanzas, which is a town about half an hour's drive away from our block. There's a rail line, a pipeline that goes to there. There's an oil field immediately to our north, a small one called Mahagia. It just trucks its oil from there to that deep water port around the corner. There's tank farms there at Varadero. The infrastructure's all there, sealed roads. It's not as big a consideration in Cuba as we have to do when we're working in Australia.
Andrew, the Cuban domestic market for oil, I mean, what's their energy market made up of, if you like? What's their mix like, and why is oil so important to Cuba?
Their electricity market is almost entirely oil-fired. There's some gas. They're trying to put some renewables into work, and they've got significant ambitions to achieve by 2030. But it's oil-fired. You know, their lights come on because of their domestic oil production. In fact, they have to import as much oil as they produce. They need about 90,000 barrels a day. They produce 45. So the oil market's incredibly important to them. And that is, why we were able to get such a generous PSC in terms of area and prospectivity to try and help them develop them.
Andrew, it's been an incredible 24 months, not just for Melbana, but for the oil industry generally. We've seen a transformation, if you like, across the oil sector. Oil prices have rebounded to highs that we haven't seen since, 2014.
5 years, yeah.
There's a global energy crisis across Europe and Asia. What does this tell us about the sustainability and security of the oil market going forward?
Well, if you look at oil, it is, and it's not my opinion. I mean, the IEA reports, the UK's Climate Change Committee reports, the International Panel on Climate Change reports. They all project that oil will continue to rise in the volume demanded from now out to 2050. The rate of increase of the demand plateaus, but it keeps going up. So you've got 95 million barrels a day plus or minus demand in the world today. And you've had this huge ESG pressure put on it. Well, initially, going back to the period you talked about after it was last at those highs, the lack of price has meant that the incentive to invest in oil exploration has diminished. And then on the back of that, you've had this wave of ESG, anti-investment philosophy against oil, which means that the majors are pivoting. They're trying to do things that are more renewable. They're not spending as much on exploration. So the supply is not coming in and the demand is going up. You do the math,
Pretty simple, isn't it? What's your outlook in the shorter term over the next, say, 12 months for industry?
I think there's going to be, where you're talking in the world for a start. Your questions maybe best reduced to, in my case, to Australia. I think industry in Australia has got some exciting opportunities to pursue. There's great opportunity in this funding revolution for a renewable energy objective. And so don't throw the baby out with the bathwater. The energy, the gas and the oil are going to be incredibly valuable, but there's a lot of people wanting the money to go in other directions. So you don't want to stand in front of that either. Then there's the offshore, decommissioning work that industry has to face up to too. These are all exciting challenges. If you look at them as exciting challenges rather than impediments, industries have to adapt and move. And this is the biggest one I've seen in my life. I think any of us have. So there's great opportunity as a result.
We are out of time. Andrew Purcell, thank you so much.
You're welcome. Good to talk to you again, Paul.
Andrew Purcell is the Executive Chair at Melbana Energy. You can find out more about the company at melbana.com or, of course, by subscribing to energynewsbulletin.net. The company is listed on the Australian Securities Exchange under the ticker MAY. I'm Paul Hunt, Senior Journalist covering energy, commodities and mining at both Energy News and Mining Monthly. If you're interested in other long-form discussions about the energy industry, subscribe to our YouTube and iTunes accounts. We regularly post in-depth discussions ranging from roundtables and panel discussions to feature interviews like this one with leaders in the global energy industry.